Welcome to TheoTrade. This is Don Kaufman. It's July 18th, 2016. You are joining me for the Theo Night Report. The grind to the upside continues here in the S&Ps. And if you are short this market, wow, it has been a painful grind to the upside. Not only because it's been slow, methodical the last couple of days, but it is just an unrelenting rally. However, this week kicks off a number of major earnings. And all throughout the course of a little bit last week, but really kind of kicking on to this weekend and today, every email that I get is something about earnings, right? So I'm going to go through a little bit of the details. Number one of, well, what stocks are going to have earnings, and number two, the types of trades that you can really do around an earnings announcement. So let's kind of hop to it over here and what you can do around earnings. More importantly, how to even find earnings. One of the things I do is I run a scan for that. So on thinkorswim, I'll close up the left side bar here. Just about 4 minutes to go left in the trading day, just grinding in the S&Ps. But I go to the scan tab, and typically I like to scan in weeklies. What that means is any product that has weekly options, it's a good place to start with liquidity. Granted, you're not going to have a stock like, well, the spiders have weeklies. Yes, but they do not have earnings. And this is under a study filter, but has earnings anytime in the next, I'll just do 3 bars. And 3 bars is 3 days. Hit scan. There's 29 products that come up over here. And some of the underlyings, Bank of America. Well, that got released this morning. American Express coming out over here. Goldman Sachs, couldn't happen to a better company. That is tomorrow. That's Tuesday prior to the bell. IBM's coming up, Intel, again, some big names over here, Microsoft, Netflix. Well, Netflix is coming out in just about 4 minutes, just after the bell today. So one of the questions that I get very frequently, and again, looking through the usual suspects, Yahoo! Nobody cares about that anymore, as they're about to, they're going to break it up. Don't do it. Anyway, if you want to take a look at the trade tab, and we'll go into something like Netflix. All right. Really, I've harped on this a lot during our chat room sessions here at TheoTrade, but I'll make this kind of clear. What can you do around earnings? Like, legitimately, what can you do around earnings? And I talk about this every time we kind of have this, this is kind of the kickoff week, right? A little bit of earnings last week of some of the banks, but this is the full-blown week where earnings really gets in a full swing. So there's really, in my estimation, about 4 things you can do around earnings. Number 1, okay, what could you do? You could be a bull, so you can put on a bullish trade. Number 2, all right, you'll never guess. You could be bearish. So coming into the earnings and something like Netflix, you can be bullish, right? You just take your upside bet over here. Fantastic. You can get bearish. Look for the downside move. Number 3, okay? What can you do is what I call sell the EM. What's selling the EM? It's the expected move. Okay. Or number 4, you could do what's called kind of buy the EM. Now, if you sell the expected move, you think we're going to stay inside of, we'll just round this to $9.50. It means you think we're going to stay inside the $9.50. If you buy the expected move, all right, you're looking for the move outside the $9.50. And this is it. People are like, well, what about the implied volatility? Well, the implied volatility, right? Either you think it's good or you don't think it's good. But people try to make earnings so difficult. They're like, well, I'm going to do me one of them double calendars. It looks like this. It's like the Batmobile. It's got 2 tent poles. Anyway, they get so infatuated with earnings. And earnings really break down to, well, one of these 4 things, right? You're either getting bullish, you're getting bearish. You're going to go out there and sell the expected move, or you're going to buy the expected move. And again, I like to present this because, well, something's going to happen here in Netflix in just the next few minutes. And I'll tell you, there's statistical data that shows, going out there and buying or selling expected moves, what that ultimately means is, again, if you look at this in terms of a distribution curve, and I like to kind of draw things out around earnings, right? Here's the distribution curve, and Netflix is trading right now, let's just call it about $99, right? So it's going to go, roughly speaking, the market's pricing up about 950, all right, or down about 950 from where it currently is. That's it. Now, what you can do is you can sell out of the money options, then maybe buy other options to hedge off the options you sell, and you're like, oh, please stay in that range. And that's all well and good. All right, and that's selling the expected move. And then you could buy the expected move, which means you think we're going to go outside that range. But I'm going to tell you something interesting about that. If you looked at thousands and thousands of different earnings announcements over many, many years, they'll actually show that there's like zero expected return on that, which means if you just sold options coming into earnings, the expected return, right, over time is actually zero. So why would you want to do it? Oh, I don't have an answer for you. I don't. But I will tell you something interesting. Other data shows, okay, that if you trade with the trend of the market, that when the earnings come out, okay, a high percent of underlyings, there's the bell, ladies and gentlemen, a high percent of underlyings, though, will trade with the direction, okay, of the marketplace. So right now the market's bullish. So inside, an underlying, you put on a bullish trade. Maybe risk a buck to be able to make a buck. And the next underlying, you put on a risk a buck to make a buck. Bullish, 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 bullish. Because if you look at some of the initial earnings that have come out as of lately, Bank of America, it's been bullish after the earnings. And, Citi, it's been bullish after the earnings. And JP Morgan, almost all your banking stocks that have come out have actually had bullish moves, which goes to show that that is effective. And here we have Netflix ultimately that's, looks like it's going to be out here momentarily. The markets are bouncing around a little bit in the after hours. So this is something, again, it doesn't work all the time. But if you look at doing, all right, and I'll give you an example in this. If you look at doing like 30 trades, okay, around earnings announcements, and every single trade, you did the exact same thing. And I'll give you an example. You just risk a buck to be able to make a buck, okay? And on those 30 trades, ultimately, what you're going to find out is if the market is in a, the bullish formation, if the market's more bullish, then more often than not, over 60% of these trades will actually work. And that's the only thing definitive that's been shown, okay, around the earnings announcements. So here we have Netflix, okay? Looks like there's some data out right now, okay? You'll see that I have a position on here. I have a bullish position. What I'm going to do is I'm going to test out this little theory, okay? I'm going to be trading ones and twos around earnings announcements and see that if pretty much everything that I do happens to be bullish in a more bullish market, do the statistics play out like you would see? And again, everybody goes, well, oh, by the way, look, it's backing off now. Oh, it's getting killed. That was going to work for a second. All right. By the way, you have to really love earnings because it's in the moment. Listen, I have a position on over here, and you're watching the market. Even though you're watching this recorded, you're watching it with me. And, oh, train wreck. Okay. But take a look. It moved right now. It's pretty much at its expected move to the outside of the expected move right now. We'll see. It has a conference call coming in there. For all you know, this thing could be up $10-15 in by the open. That's the name of the game around earnings. Speaking of which, Netflix has actually been shown to break outside its expected move more than many of the underlyings out there. And it is right now, it's outside the expected move. Nevertheless, the day is young. So with that, think about the types of things that you want to do around earnings. If you're going to trade them, all right, recognize that so many trades out there around earnings, they're a crapshoot. You can't control your risk. There's only 4 things you can do, and just recognize, like, high implied volatility is just denoting more risk. It doesn't necessarily mean this is the opportunity for you. You're not selling high implied vol. You're selling the risk that the market perceives. With that, I want to thank everybody for joining us here at TheoTrade. Again, we'll be back on all throughout the course of this week. And please enjoy these videos. Feel free to shoot us emails from time to time. And again, my name is Don Kaufman, back on TheoTrade Chat tomorrow morning. Have a great evening. Bye-bye.